The top business stories live from the Sky Newsroom. The US and China resume trade talks here in London in a bid to agree a deal on tech and rare earth minerals. So Keir Starmer strikes a deal with the giant chip Nvidia to help the UK train more people in AI. Plus, crime star Skepta's former manager and business partner launches a startup, allowing fans to invest directly in streaming loyalties. Very good morning on this Monday Business Live with me, Darren McCaffrey. The United States and China are set to resume trade talks here in London in a bid to further diffuse tensions over rare earth minerals and advanced technology. Donald Trump has said he expects the meeting to go very well following a phone call between the US President and Xi Jinping last week. Let's bring in our business and economics correspondent, Gurpreet Narwan, who's for us in central London. And it's a good sign, at least, that these sides are still talking.
It is a good sign. It's been a bit of a scramble to get it all ready, to be honest. The Chinese called on Friday morning to take the UK government up on its offer to host the talks between China and the US. The plan was for those to take place on Wednesday, actually, but then the Americans brought it forward. So everyone's racing to get ready. And the decision to host them in London speaks to the type of foreign policy that Britain is pursuing. It's trying to reset relations with China. It's seeking investment from China. And at the same time, it's trying to get a trade deal with the US over the line. And we understand that Rachel Reeves actually met with her counterparts last night. So watch this space. There might be something in that area. In terms of what these talks are going to be centering on, you kind of mentioned it earlier, but the aim is effectively to firm up a truce that both sides agreed back in May in Geneva, where Donald Trump agreed to reduce some of those triple-digit tariffs that he had on Chinese goods coming into the country to 10% for 90 days. That truce has been unsteady, with both sides accusing the other of breaking the truce. And of course, it didn't deal with some underlying challenges, as you mentioned, not just about tariffs, but also about access. And both sides in this area have considerable leverage. The Chinese, for example, have been curbing exports of rare earth minerals, things like graphite, which is critical to the US EV industry. And the Americans, for their part, have been limiting exports of advanced technologies, things like chip design software. We know that the Chinese are trying to develop their own semiconductor industry. So there's a lot to gain from both sides. There's a lot of harm that both sides can do, but it's also leading to considerable self-harm because, for example, the Americans' policy on chips is hurting its own companies. Many of them have considerable sales in China. But this is only one step. The process to normalising relations between China and the US is likely to be long-winded. However, this is one step on the journey there.
And Gurpreet, this is the fascinating thing, is as long and alongside these negotiations with China, the United States is also involved in the tense negotiations with the European Union to strike a deal there, and still working with the UK on the implementation of our trade agreement too. And that's aside from all the other deals the US is trying to strike.
The US has a lot on its plate, but Donald Trump is getting people around the table, and particularly Scott Bessent, the Treasury Secretary, who's leading these talks. He's a conciliatory figure, a comparatively conciliatory figure in the Trump administration. He's been making some headway with China. But as you said, we've also got a trade deal with the UK to think about, or they've also got a trade deal with the UK to think about. And there are opportunities for the UK government to pursue some sideline conversations. As I said, Rachel Reeves met with her counterparts last night. We could very much get a breakthrough on that as well.
And Gurpreet, I think finally, just on this, you look at where Donald Trump is, and as you say, he is trying to strike these deals. He is getting people around the table. What may have well surprised the United States, particularly in relation to China, is that they feel they don't quite need to cave or give as much or compromise as much as the White House may well have thought 6 months ago. This idea that the United States has all the cards hasn't necessarily proven to be correct.
Yeah, that's absolutely correct. As I said, both sides have considerable leverage. So you've got the rare earth minerals control that the Chinese have. They're the dominant producer and refiner of many of these minerals. They are critical for manufacturing in the US, for things like EVs, as I mentioned. And they have considerable power there, considerable leverage to harm US industry. The US, for their part, things like advanced technology, so chip design software, certain semiconductors, they can restrict those exports which are harming China's ability to form a nascent industry of its own. That being said, all of this comes with self-harm as well. So the export of semiconductors, for example, by limiting those, that hurts company profits in the US. So I think China has about 33% of sales of semiconductors, and of that, the American companies capture about half of that. So companies like Nvidia, for example, are being hurt considerably by this. They've got interest on both sides to finding a deal.
Gurpreet, great stuff as always. Thank you very much indeed. Gurpreet Nowral there, live for us in central London. Now, the beginning of London Tech Week has been marked by the US acquisition of a startup spun out of Oxford University in a $1.1 billion deal. Maryland-based IonQ, which has a market value of nearly $10 billion, announced the acquisition of Oxford Ionics, I'll get that right, in a bid to try and develop more powerful and easily operable quantum computers. Well, delighted to say it, we can speak to Nicolo Dammassa, who is the chief executive of IonQ. Good morning to you, Nicolo. I suppose, first of all, why the deal? Why did you guys want to take this company over?
Well, it's a huge endorsement, obviously, of the talent pool in the UK, but really we're bringing together the two leading companies in the ion-trap quantum computing industry. And this partnership and merger between our companies is going to create, we believe, the world's most powerful quantum computers. We believe that we're going to be able to lead in every era of quantum computing, not only as IonQ leads today, but with Oxford Ionics' help, we'll be able to power ourselves forward into the area of what's called full fault-tolerant quantum computing. This will allow us to, frankly, change the world. We're going to be able to address some of the world's most complex but most valuable problems, things like drug discovery, things like applied materials work, obviously work in the defense space, work in the logistics space. On a combined basis, what IonQ and Oxford Ionics is doing, I think, is actually a truly historic moment today for our industry.
Nicola, just talk us through quantum computing. There'll be a lot of people who've obviously heard of the term, but will have no idea really what it is. Just explain it to us all.
I think of it as the largest, I'd say, revolution in the entire compute industry in 80 years. So you were just talking about Nvidia. They make GPUs, graphics processing units. Obviously, Intel, makes CPUs. Those have been around quite a long time. QPUs are the next leg up. And we are moving forward at what we call a doubly exponential rate. So every time we add a qubit, we double the power of our machines. That means in a single generation of our QPUs, we can expand the power of our machines by hundreds of millions of times. It's not just like Moore's Law where you double every 18 to 24 months. We're increasing power by hundreds of millions of times every generation, every 18 months or so. So you're going to hear a lot more from us, obviously, in the coming months and quarters. But we're in the era of what's called narrow quantum commercial advantage today. We're rapidly moving into the fault-tolerant era. Oxford Ionics is obviously accelerating that with IonQ, and we believe that we're a US-UK alliance now that is able to take on everyone else in the world, from China through to every other private sector company you've ever heard of, and win.
And I suppose that's the question, though, is how committed are you to the UK? Because we've seen quite a lot of this in the past. Big US tech companies buying up much smaller, kind of British startups, if you like. Are you guys committed to the UK? Is this a genuine alliance?
It really is. I went to Cambridge University, actually, and read physics, undergrad and grad. So Dr. Chris Ballance, who's the founder of Oxford Ionics, and I both have common friends, in the physics community here. So it's a commitment to Oxford, but it's also a commitment to, the Cambridge-Oxford triangle. We're not that big a company, to be honest, right? We're a $10 billion market cap company, and so the Oxford Ionics shareholders in this share swap, will own 7 to 11% of the enlarged business, and we're all staying together to power this forward here. So it truly is, much more of a merger than you'd see with something like an Nvidia or a Qualcomm acquisition announcement, where it really is a giant and a minnow. Here, we're a mid-sized company in the U.S. at $10 billion market cap, and obviously Oxford, becomes a really big piece of our go-forward global R&D strategy.
And what's your sense about us here in the UK? There, at least internally, have been concerns about where we are globally with AI, with things like quantum computing, that we're not necessarily in the top league, in the leagues that the United States and China is in. Do you think that's a misconception? Are we being too critical about ourselves? Or do you think at places like Oxford and Cambridge and elsewhere, we do have some competitive edge? We do have the ability to build up some decent companies?
No, I think we have some of the finest talent in the world in the UK. I think that's been recognized for decades. I'm biased because I consider myself an educated here as well. But the reality is, quantum is the future. And so it doesn't really matter where classical AI is today or where it was a few years ago. I think the UK can win in the quantum era of computing, and IonQ and Oxford Ionics are a great, start to that. And I believe that we will be the perennial leader here, but we look forward to growing our talent pool and investments in the UK to make sure that happens.
Okay, Nicolo Damasa, with your IonQ badge I see on your jacket. Thank you very much indeed for joining us. Thank you.
Have a great day. Thanks.
Now, the Prime Minister, Sir Keir Starmer, and the Nvidia Chief Executive Jensen Huang have reached an agreement which will see Nvidia help the UK train more people in artificial intelligence. The Prime Minister is pinning his hopes on artificial intelligence to help boost economic growth. The agreement also expands research, universities, and the company's own AI lab in Bristol. Well,
AI and tech makes us more human, which sounds an odd thing to say, but it's true. And we need to say it because, look, some people out there are skeptical. They do worry about AI taking their job. And I know for an audience like this is a debate that's been had perhaps many times, and we need to push past it.
That was the Prime Minister speaking a little earlier this morning. So I'd like to say we can speak to Lana Hampicker, who is a partner at T3. It's a responsible AI advisory firm, and joins us down the line. Lana, very good morning to you. I suppose my first question is, how significant is it, do you think, the very fact the start of London Tech Week, Nvidia is in town and that the Prime Minister is talking to them?
Yeah, it's very significant. It's a big deal for the UK because you can't do AI without doing compute. So the fact that the UK is receiving 10,000 GPUs as part of this Nvidia partnership means that they will be able to not only train 100,000 people, but they will be able to have the infrastructure that up until now has been very much reserved to high-tech companies, accessible to UK startups, to the civil servants, to universities, and that changes the game massively. Nvidia is also working with regulators on sandbox initiatives, which means that finance, the financial companies, the NHS will also be able to experiment with Nvidia-powered AI technology.
Yeah, and the idea about AI, at least initially, is that it's going to help us do lots of tasks in a better way, much more easily, and also that it will save us time. I think there was a note recently that civil servants who'd used AI had shaved 2 weeks of the working year because it had stopped them having to do some menial tasks. But there will be concern, too, that AI will increasingly take people's jobs entirely.
Yeah, so that's been an ongoing debate. The UK has one of the most ambitious AI training targets. So if you compare the size of the UK workforce to the targets of the UK government, 1 in 5 people will be AI literate by 2030, which is a very ambitious target if you compare it to other countries. Because we graduate about 50,000 engineers, but to aim for 7.5 million AI literate workers, that means that you are going to be transforming at the same pace as AI development, which in some ways, sorry.
No, I was just going to say, but the two things that people point out hold us back is we need access, of course, to those really high-end chips, but also the cost of our energy too.
That's right. That's right. So that is one thing that that the government has to look out for. Partly, the conversation now has been the comparison of our energy infrastructure versus that of France, and how we can accelerate our energy transition and our energy investments to be able to leverage AI capabilities much wider. So I totally agree with that point.
Okay, Lana Hampicker from T3 there. Thank you very much indeed for joining us.
Thank you. Thank you.
Okay, let's have a look at how the markets are doing on this Monday morning. Let's speak to Russ Mould, who is an investment director at AJ Bell. Very good morning to you. Russ, can we start, first of all, if we can, big news today, WPP, one of the largest advertising agencies in the world, and its chief executive is stepping down.
Good morning to you, Darren. Yes, so Mark Reed stepping down after 7 years in charge, or it'll be by Christmas, it'll be nearly 8, and that's actually longer than the average term of a FTSE CEO, which is around 6 years. I guess the challenge that Mr. Reed had was, first of all, he was taking over from Sir Martin Sorrell, who more or less built the company up. And secondly, advertising agencies have been challenged by a digital social media world, and the share price has not done well under his tenure. So it's not clear that he's managed to adapt the company fully to the new circumstances. The share prices have the common decency not to go up on the announcement of his departure today, though that may reflect concerns over, well, who's coming in next, because there doesn't seem to be a clear succession plan.
Yeah, it is quite extraordinary, is it? And we're talking a lot today, Ross, about AI and its impact, and that is already being disruptive, and in some ways, WPP is a sign of that.
Yeah, it's one of the advertising industry, one of the biggest challenges that it faces. And again, it's not entirely clear that Mr. Reed's been able to prepare WPP for the brave new world, as it were.
OK, Russ, let's talk about politics a little bit, because it's a big week, isn't it, when it comes to government spending. We've got the comprehensive spending review on Wednesday. And this is crucial because it sets out budgets, doesn't it, for years to come.
That's the theory. I'm sure Labour would like to think that they'll get another bite at it after the next general election. I guess if things were to be a little bit different results-wise, then it may not set the stall out for quite as long as they would like. But yes, certainly for the term of this Parliament, we'll know exactly what the Labour government's looking to achieve in terms of its major areas of focus, looking at some of the issues that are creeping out into the papers and the newswires today. NHS and defence seem to be top 2 priorities, with infrastructure not too far behind. So we'll see exactly what the Chancellor of the Exchequer says on Wednesday. I mean, it is interesting, over the last 40 years, Labour having, got in 2024, if you go back 4 decades, defence and the NHS both got 5% of GDP of spending. NHS has massively outstripped that. It's now all up to a 10%, and defence is down to 2 and change. So they will be looking to keep the defence spending, get that higher. But clearly, NHS, politically and socially, a huge priority.
And Russ, let's talk about retail here in the UK. We've seen this kind of tussle, tug of war, what would you call it, between Fraser, Mike Ashley, Boohoo. It's just continuing on, isn't it?
They're not necessarily the best of friends. Mr. Ashley tried to lever his way onto Boohoo's board and failed in his attempt. And now he's coming across Boohoo again. Mr. Ashley's looking at Revolution Brands, which has been a bit of a mess of a makeup company since it floated. Its shares have gone down from 160p to 8 pence. He's now emerged as a possible bidder for Revolution, where Boohoo has a stake of nearly 30%. So it may have a big stake in whether Mr. Ashley gets his hands on potentially another bargain and another fallen retailer.
And it's fascinating, isn't it? We talk about retail and the struggles it's under, and we talk about, places that still have physical buildings and the high street and whatever. And whatever you think, Mike Ashley has clearly decided there is still business to be made, money to be made there.
Yeah, like any good shopper, he's always looking for a bargain, and Revolution share price has collapsed. And if he clearly feels there is something in the brand, there is something in the business model, and if you can buy it at a low enough price, then there's still value to be extracted from it.
Yeah, indeed. And just very finally, let's end on Qualcomm. What is happening there in regards to Alpha Wave and its share price?
Yeah, they first expressed their interest, I think, back in April, and they've now finally tabled a firm cash offer of 183 pence a share. That's a 70-odd% premium to the share price of a few months ago, a £1.2 billion bill. I guess a budget. I guess there are 2 ways of looking at it. You can either say, That's a nuisance. That's another British company, another technology company potentially leaving the UK stock market to go into American ownership. The more positive of looking at it, overseas firms want to own British assets because, as we've heard earlier, there are some fantastic companies out there with great people and great technology. So, and it also suggests that overseas buyers think there is still value to be had from the UK stock market, which isn't always the message that we get.
Ross, great stuff as always. Thank you very much indeed. Ross Moore there from AJ Bell. OK, you're watching Business Live here on Sky News. Coming up next is the music industry entering a new era of artists having more financial control over the work. We'll be talking about that in just a couple of minutes.
Show of military might and menace. Why should the West trust you?
Frankly, I don't care whether the West trusts us or not.
Sky News. Get the full story first.
Have a quick word for Sky News. Is the West right? Are you fueling Russia's war machine? American journalist Evan Gershkovich is on trial here, but was first on display.
I'm Ivor Bennett, Sky's Moscow correspondent.
Staying connected is vital for business. Sky Business sponsors this report. Sky Business sponsors this report.
Very welcome back to Business Live. Now, last week, Taylor Swift brought back all the rights to her master recordings, paving the way for other artists and the financial rights. The news comes as grime star Skepta's former manager and business partner, Dwight Okechukwu, has launched a new startup to allow fans to invest directly in those streaming royalties. Well, delighted to say Dwight joins me now and has set up his own platform. Just talk us through, what is the idea behind all of this?
It's basically just a platform that allows artists to basically get money from fans directly, so because like the normal system that we have now is that artists, when they need money, they have to go to the corporates to raise them to get funding or labels and whatnot. And for the up-and-coming talents, it's very difficult. So the platform allows you to deal directly with your fans and just like investors that people that into music that want to invest into your music directly. So it takes away the labels and brings like fans up front, like for direct funding.
And Dwight, I suppose in the past, you know, big artists, up-and-coming artists needed, didn't they, the labels to get noticed, to get the publicity, to get on the radio, for example. Do you think that's less needed now, hence why you can have this direct route?
Yeah, of course, it's less needed now, because now people are building a community and they've got fans they're building super fans that are really like invested in them, so you can deal directly with them. And obviously it's like, sometimes the artists might just need 10 grand, 5 grand. They don't need much money, so they don't need to go to a record label for that money. And so everything that and so their art, they could go directly to the public and do business with the public, right? And have the fans invested in their music and earning with them and growing and building with them. You know, so for the first time now, everybody can get involved and make money, and the fans are actually getting something back from the investment that they've been putting in.
Yeah.
You know what I mean, for the past years.
In some ways, both sides can be winners, if you like. But this comes at a time as well in which there's concern in the industry as well, not just about royalties and making money from the music you produce. We've been talking a lot about it on this programme, about AI stealing music effectively or creating music based on others' efforts and work.
Exactly. And that's what we're trying to eliminate as well now, because all the platform, everything's, we're trying to eliminate the whole AI system, having artists and directly invested into the platform. And obviously, like, we do all the KYC, and because it's a financial platform, we make sure that we don't have that risk, the AI factor in there. So artists are approved.
OK, Dwight, we really appreciate your time this morning, and really good luck with the platform. As you said, there's lots of pressures on the music industry at the moment. Thank you very much indeed.
Thank you. Cheers.
OK, well, that is it from me on Business Live for this morning. We're back, of course, at 4:30 this afternoon. Do join me then if you can. Coming up next, it is the rest of the day's news with Gareth Barlow, including the latest from Los Angeles, where we've seen disturbances over the last couple of nights. And indeed, maybe an announcement from the government when it comes to spending in the months and years to come. Stay tuned for that at midday, and I will be back at 4:30 this afternoon here on Business Live. Do join me then if you can. Goodbye.